All right, yo, what's up for everyone on the YouTube replay? I hope you guys had a great Christmas week, holiday week. I know New Year's is coming up, so let me give you a quick portfolio update. Let me show you how my portfolio did in 2025, and then we'll look at some of y'all stocks to see what stocks we should potentially be looking at to buy in 2026. So that should be fun. So yeah, let me start with my Weeble portfolio right here. This is kind of like our growthy portfolio. We're up 18.7% all time in here. And here are our big winners in here, like AMD, Dave, Robinhood. Some of my biggest regrets are, trimming and taking profits on some of these names. But yeah, we also have some big losers in here like Sprouts Farmers Market, UiPath. Progressive pays is about to pay a nice $13 special dividend, which is crazy. So that'll make up for like $50 of these losses, which is cool. But yeah, that's our Weeble portfolio, kind of our there's a lot of action going on in that portfolio. But then we have our Moomoo account. So our Moomoo portfolio is basically our portfolio where once we buy a stock in here, we never sell it. So yeah, if you look at the top left there, it's called our buy and never sell portfolio. And here are all the stocks that we've chosen in here. And every single stock in here pays a dividend except for Amazon. I'm actually about to buy another share of Amazon just because they're at a fair valuation, a 30 forward PE. I mean, at a quality name like Amazon's worth buying. Like Buffett says, it's better to buy a quality company at a fair price than a fair company at a cheap price. So yeah, Amazon, I think, is just going to continue to win in the long run. Yeah, year to date, let me give you a quick year to date performance. We're up dang 90% year to date. Year to date is just since January 1st. And, my YouTube studio is being buggy right now. Actually, that's not good. I can't see the chat. That's actually so sad. I might have to actually end the YouTube stream. I've never had this issue on YouTube. Let's see here. Pop out dashboard. All right, but yeah, it won't show me the chat. Okay, whatever. But yeah, we're up a good amount in our Moomoo portfolio, and then we have our Robinhood account, which is kind of just our main portfolio. It's called our dividend only account because every stock in here does pay a dividend. We're up 17% or 17% year to date, and every single stock is red in here on the day, so that's not good. But if we go to our total percent change, we are green on every stock in here except for Carlyle Group. That's the one stock we're down on. We also have a Roth IRA. A Roth IRA is just like a tax-free retirement account where it's worth. We started it pretty much a year ago. It's worth $5,600. We've deposited basically all the money, 5,000 of that this year. So, and really just in the past couple months here. But yeah, actually, someone said, what do you think about SoFi right now? Hey, what up, Jonathan? So I am a SoFi shareholder. It's a great fintech company, so innovative, but it's expensive, and that's why I really wouldn't buy the dip at its current price. This is a stock I regret every share I've ever sold on. We were buying this stock like way back here in 2023. But yeah, SoFi deserves all the hype around them because they truly have impressive numbers. But look at this forward PE over here. It says a 74 forward PE. That's a bit expensive, but that's honestly kind of wrong. It's probably like more like a 40 to 50 forward PE because they always crush expectations. So let me show you that right here. We go to the orange line here. That's what the analysts expect SoFi to report every quarter. This is what justifies SoFi's high valuation. The revenue beat, the EPS beat, and the EBIT beat. So yeah, that's great news. Let me actually do some real quick. Yo, YouTube is not okay. That was supposed to happen. Hey, what up, Looney Plasma? And there we go. Okay, I had to pull it up on an incognito tab. But yo, good to see you, Looney Plasma, Vicky, everyone on the YouTube stream. I hope you guys are having a great day. Yeah, okay, I got YouTube to work. We just had to pull it up on an incognito tab. Okay, thank you, YouTube. So anyway, all right, stream's working great. What up, Schling? Good to see you all. But yeah, SoFi, here's another thing that justifies SoFi's high valuation. All right, I feel much better now. The stream's totally working now. Okay, perfect. But yeah, if we go to SoFi's right here, financial services, this is what is so impressive about SoFi and what deserves their high valuation, in my opinion. Like these year-over-year comps, like in the middle here, they're growing at like double to triple digits, like 76% year-over-year growth after they grew 101%, after they grew 140, after they grew 80%. Like these are the kind of growth stocks you want because they're just going to continue to do better. The revenue is like investors are really taking SoFi serious. They're making a lot of revenue. Revenue's up 37%, nearly to $1 billion. Net income, they're making 100 mil in net income a quarter. There is a bit of dilution, but the EPS growth rate's still phenomenal. Let's see here. Yeah, analysts are expecting, yeah, they're supposed to hit $1 billion in 2 quarters. So that's crazy. SoFi is a great financial tech company. They're just launching their own stablecoin. Let's actually pull up the news on SoFi real quickly because I do like checking that out. SoFi launches SoFi USD stablecoin backed by cash reserves, becoming first national bank to offer open access. Hey, SoFi got their banking charter in the US. So yeah, SoFi reports 38% revenue growth and attracts increased institutional investments. So that's cool. Um, let's see here. Anyone like Qualcomm? I really like Qualcomm. And Chewy stock. Hey, we got like a Chewy gift card. Basically this is a company where you buy like pet supplies, like pet food, and they advertise that it's cheaper to buy and get your pet food delivered to you via Chewy than it is to just go to the store and pick up the bag yourself. But they're expensive, a 42 forward PE. That's not cheap. Let's actually go look at their numbers though. So yeah, wow, look at the growth expectations though. I don't know if they're doing some acquisition, but look at the revenue. It's supposed to rally up to 3.37 billion. Did they do an acquisition? Let's check. You go to the cash. Well, not really, no. Maybe that's just yeah. So here's the bottom line right here. They're making net income every quarter, which is good news. So it's not like they're losing money any quarter. So they are actually making a good amount of net income every quarter. Yeah, these are great year-over-year comps too. So they're getting better with their profitability, free cash flow as well. They have good free cash flow. They just sell a commodity. What's their net margins down here? Yeah, 1 or 2% net margins. It's a tough low margin business. So it's kind of hard to pay 42 times forward PE. That's almost as cheap as SoFi, and that's more expensive than Comfort Systems and Amphenol. Hey, what up, Nick? Very late Christmas. Yeah, hope y'all had a great holiday, and we got New Year's coming up as well. That should be fun. Let's see here. Let's actually look at Qualcomm. You know what? Let's do it. Uh, and what up, Griseno? How's it going? Show the monthly chart with RSI. Oh, hey, that's more technical analysis. We're really doing the financial analysis because technicals work in the short term, but in the long term, what really moves the stock is the fundamentals. Because the technical setup could look amazing, but if they have a bad earnings report, miss on margins, miss on numbers, companies going bankrupt, well, that's for swing trading, but I love buying and holding great high quality stocks that give you the same returns as these options and swing traders. The goal, in my opinion, is to get 10% of your money back a year with a stock, or with the S&P 500. You want 10% of your money back a year, but with some of these growth stocks like Comfort Systems, I bought this stock this year, and basically we got 16 years of S&P 500 returns, with this growth company. So, it doesn't always work out. That's why you want to have a diversified portfolio of great companies that you think will outperform. So Qualcomm, though, is another cool one. This has a nice dividend to it. Pretty cheap, too. A 17 forward PE. You really want to look at the forward PE because they did have a one-time adjustment on their most recent earnings report. Like, this looks bad at first glance, but it was a one-time adjustment. So if you look, it says they lost 3.1 billion in net income, and net income is EPS. So it says they lost 289 of EPS, which makes the PE ratio go up. That was a one-time adjustment. They didn't actually. The core business was a record for the Q4. This is actually a bit of a royalty company. Here's their smartphone chip market share. They have a 26% smartphone chip market share. I was reading the Morningstar research about this company, and this is what I found pretty cool. If you read the first line here, it says Qualcomm collects royalty income on the majority of 4G and 5G cell phones sold, as it holds many essential patents used in these networks. So pretty cool. Qualcomm also has, check this out, a 2% dividend yield. So you get 2% of your money back just in a dividend. So here's how much they're making. Excluding that one quarter, they're easily making, call it, if we average it out, 2.85 billion of after-tax net income a quarter. So they're making 2.85 billion, and the dividend only costs 957 million. And the cost of the dividend went down from the previous quarter because since they have so much leftover money, they're doing massive share buybacks. Check out the top here. They're doing 1 to 3 bill of buybacks a quarter. That's actually insane. So yeah, there's Qualcomm for you. It's one I probably have as a little small position. The smartphone chip, Apple's making their own smartphone chips. That's another reason why there might be some increased competition for Qualcomm. I don't know. I think they might have lost a deal with Apple. I don't remember exactly, but I think they own like Snapdragon and stuff. But anyway, Qualcomm's cool. Certainly cool. I like that. Hey, Nick said ticker symbol C or C as in ticker symbol C. Let's check it out. Ooh, and perfectly crystal said, can we look at Bull? Yeah, remind me to get to Bull stock. That's one of my new positions. I really do like them. Uh, so let's see. Ooh, we'll look at CLM. You just earned a sub. Hey, deep pockets. I appreciate that. Hey, if anyone wants to hit the follow button, we stream. We try to stream every day. I've been busy this week because it's the holidays. But yeah, I sell nothing. I have no course book, WhatsApp. I don't no coaching. I literally sell nothing. So please watch out for people impersonating me. Just on here, give my opinion, not financial advice. So here's Citigroup right here. This is I think a bank. So these always trade at low valuation. So they're trading at a 13 forward PE, and the stock's at an all-time high. So that's really impressive. That might mean it's probably just going to continue to go higher. So it's not just a pure bank. Look at this. They're in markets, services, United States personal bank, and that's only 25% of the revenue. So like down here, and I like how diversified that they are. They're in like wealth too. So like wealth management, maybe they do like their own index funds or ETFs or something. But yeah, hold on here. Got that. Okay, there we go. But yeah, look at the most recent quarter. They've been beating on expectations every quarter for the past 3 quarters. Massive beat on revenue, beating on net income every quarter, and on EBIT, earnings before interest. So no wonder this stock is just going up on every earnings report because they keep on beating on analyst expectations. Yeah, look at their after-tax net income, easily like 3 to 4 billion of after-tax net income a quarter. And what are they doing with all that? Well, they pay a dividend. That dividend only cost 1.37 billion. So they're doing massive share buyback up here. Yeah. Whoa, they did 5 billion of share buybacks in the most recent quarter. Now that's impressive. So not only do you get a 2% dividend yield, but good buybacks as well. So yeah, there's an interesting financial name for you that's in a lot of different industries. Ticker symbol C for you. All right. Yeah, let's do this one right here. Bull real quick. So Bull, I do own this stock in my in my Robinhood portfolio, actually. Let me pull that up real quick. It's in my Roth IRA. It's not a stock. I can't stress this. It's not a stock you want to have as like a meaningful size position. Hey, Angela, no way. Thanks for that gift there. I do appreciate that. If you got a stock you want me to look at, let me know there. Thanks for the rose. But yeah, ticker symbol Bull is an expensive company. But I'm more bullish than the analysts are, and that's why I have a small position in them. This is not the kind of stock you want to have as a meaningful size position yet. We're down 8% on the position, not worried. This is Bull, and ticker symbol Bull is this brokerage right here, Webull, publicly traded, and I've been using their platform for many years. We haven't done great. We're only up 18% all time in here, but one of the things about this app is why I'm bullish is they just added in this prediction market stuff and crypto and this like subscription thing you could pay. I don't do any of that and I don't pay for their subscription, but they're basically copying Robinhood's successful business model. Robinhood's printing money from this prediction market stuff and their Robinhood Gold subscription, and Webull's like, let's just do the same thing. And they announced these changes right around their IPO time. So I'm just really bullish on Bull, more so than the analysts are. And they just IPO'd, so there's not too much data we get here. But this quarter, analysts expected 137. They did 157. And they expected 2 cents of EPS. They did 7. And same with the earnings before interest. So it's not like some highly adjusted number. Like, no, they're just earnings before interest and taxes beat. They expected 20 mil. They did 36 mil. So, and top line growth is great, 55%, 46. It's right around when they did the prediction market stuff. And that's what's making Hood a boatload of money because they make 2% on every transaction as opposed to 0.1 on a stock trade. Hey, try not to spam in chat there. Hold on. Yeah, we'll try and get to all these names here, like a Fubo TV. Yeah, I don't love that one. Hey, Gary, Merry Christmas, man. You too. Bandit said Sprouts Farmers Market and Chipotle worth some bottom picking. I think so. This is another one you probably don't want to have as a meaningful size position. There's obviously a lot of competition and they don't have an online presence, like Amazon Whole Foods. They have the online delivery network. So Sprouts Farmers Market is kind of like, there's obviously competition, but they sell like more healthy. This is a steal of a deal, I think. To have it maybe as a small position, I am down bad on the stock as I just showed. Yeah, we're down 38% on my Sprouts Farmers Market position. But let me show you, this company's at a cheap valuation, a 14 forward PE. They do massive share buybacks too. And the one thing I like is for, grocery stores, it's really a low margin industry, but look at their net margin expansion. This is double the margin of Kroger and Costco and Walmart. Like, this is phenomenal. They have 5 to 8% net margins. And so we go to the revenue. The revenue grew 13%. That missed expectations. So the revenue's up 13, but the net income is up by 31. Again, that means net margin expansion, which is great news for Sprouts Farmers Market. So they're actually a debt-free company. They have no debt whatsoever, or actually like the smallest amount. Let me see. A long-term, no long-term debt, and no debt at all. So this is a debt-free company. Let's see their cash on hand. $322 million of cash. So that just takes a lot of risk off the table. They're debt-free. They have 330 million of cash on hand. And what I love is the share buybacks that they're doing. If you look at the top here, 50 mil, 70 mil, 200 mil. Let me pull up the annual. Well, it'll mess that up. But yeah, they historically always just return money to the shareholder via buybacks. And that's going to make the PE ratio go down, send the EPS up, give you more ownership. And this is a stock that'll probably one day pay a dividend. But I like the fact that they don't pay a dividend. They're like any other grocery store, free cash flow. Yeah, that's what FCF stands for. Here's their free cash flow down here, even better than their net income. Well, actually, yeah. So yeah, Sprouts Farmers Market, probably fair. The sad part is it's probably fairly valued at their current prices. It probably deserves around a 15 PE. It's at a 15 PE. Well, maybe it could go to 20. It was certainly stretched up here. Where I bought it. Well, we bought this one a while ago. I don't remember where. It should show my buy orders. Well, hey, there's some of our buy orders. Anywho, Sprouts Farmers Market, I do like them. They just have good numbers, and it's just a boring, grocery store, but it's the boring stocks that usually do really good. Hey, what up, Silent MC? Can you check BWXT? What's that one? Yeah. Then we could probably pull up Pan W. I love Palo Alto Network. And yeah, hey, we'll do Fubo too. Fubo, the upside's limited, and if it weren't for the Disney deal, they're like losing subs right now, and the stock would be Fubo is a tough one, but I kind of want to pull that up now just to show you why. I actually have made videos about Fubo. Disney saved the company, and they already got their Disney money, so Disney's in total control of the whole company. If Disney wanted to, they could shut down the whole platform. Like if we go to they're for the first time, their revenue is declining year over year, so the revenue's down. They are narrowing their loss. This was their Disney influx of money. But this is the sad part. This is the companies you really kind of want to stay away from. If you go to a company's like total common shares outstanding, I mean, this has been one of the most like dilutive companies. Like in 2020, there were like 60 million shares, then there were 140, then 200 mil, 300 mil, and now they've slowed the dilution because of the Disney money. But it's a tough one. Just from a pure fundamental financial analysis and, the limited, I guess actually there is upside, I guess a double, but I don't know here. Yeah, it's a tough one. It's more of a swing trade. Fubo TV is a swing trade and not a long-term hold in my opinion. And that's okay to have it as a swing trade. Hey, what up, the Ace? Good to see y'all. So let's pull up BWX Technologies. Actually, last thing on that one, my side of the bet would be to actually just own Disney, and I think it's probably the safer investment. Or I have a little bit amount of Disney in here, which Disney is also not done good at all. Disney's done terrible. Like same price that it was 10 years ago, definitely underperformed the market. But here's BWX Tech, 45 forward PE ratio. Hey, they've done really good since 2019. It was $70. Now it's 170. Did they pay a dividend? Yeah, you get a small dividend, 0.5% yield. Nice. So government operations. Okay, so that's a good customer. So the government revenue's up 10%, after grew 17, after grew 13, after grew 2. So it's actually pretty good, that growth. And let's see, their commercial operations. It kind of reminds me like a Palantir. They have their government operations and their commercial side. Wow, this experienced triple-digit growth. That's really impressive, actually. Revenue's up just quarter over quarter, 42%. So that's a record sales, 250 mil. That by far, that's the first quarter that's ever been over 200 mil. So that must have been what beat on expectations. So we can see, here are the analyst expectations. That's the orange line. They're beating on revenue, beating on EPS, and they're beating on EBIT every quarter. So that's probably why people are taking this company serious. They do have some good net income here too. That's growing. So yeah, pretty interesting there. Might be a slight bit expensive at a 45 forward PE, but this is probably a stock that deserves a high PE ratio, especially if they're commercial operations. Like, wow. I mean, there's probably some updated guidance on that. I want to hear that. So yeah, there's BWX Tech. Kind of reminds me of a Palantir. Yeah. I got given Palantir for Christmas. Any thoughts? Hey, what up, man? What up, Looney? So, hey. Oh, and I forgot. We got to look at Palo Alto Network and Yo Neo. Yeah, hey, careful on Neo. That's a swing stock as well. Holding 1,000 shares of Lunar. Hey, I'd be careful with Lunar. I know the momentum has been in favor because of the whole SpaceX hype, but not that's one I'd swing trade too. It's hard to trust Lunar, but they do have some contracts. But here's Palantir right here. Palantir is a phenomenal stock. What is this up here? Palantir stock on the. Oh, I can remove that article. Let's remove it. I didn't even know I could do that. But anyway, Palantir. I'd love to own this stock, but it's too expensive. So here's the thing. Everything in this company impresses me. It's so impressive. It's kind of like the last stock we looked at. Here's their government operations. That's incredible growth. It's up 55 after 33 after 12. So like the growth rate is literally growing. And that's hard to do. So really impressive growth. And their commercial side of operations, just like that other company, is growing the most. That's up 73% year over year. That's what justifies a high multiple on Palantir. That's an insane growth rate. So obviously beating on expectations every quarter, making a boatload of net income every quarter, couple hundred mil, and they have a fortress balance sheet with no debt at all, completely debt-free company. I mean, that takes a lot of risk off the table. But the only thing that sucks is a 250 forward PE ratio. I'd love to own them. I really would. This is the kind of stock I'd love to own. But that valuation is tough. But it's also the kind of stock that'll really never get to a valuation that you're willing to pay. Like never get to a cheap valuation. So, yeah, there's Palantir for you. And hey, that was a nice little Christmas gift, though, because it kind of doesn't matter because the cost basis is zero. So let's go to the Palo Alto Networks right here. You know who actually owns Palo Alto Networks? And I kind of wanted to pull this up if my Wi-Fi will allow it. I want to pull up Nancy. Yeah, here we go. Nancy Pelosi actually owns this stock as well. And, she owns a lot of stocks like Salesforce, NVIDIA, I wouldn't even call you crazy to just copy this portfolio right here because it's just a lot of safe, high quality, big caps, large caps. But here's a part of software that I love. It's cybersecurity because I think cybersecurity is going to always be into need, especially as AI gets better. Hackers will utilize it, get better at hacking. And anyway, cybersecurity is just always needed. AWS was just down on Christmas Eve. But yeah, this one has like over half of the S&P 500 are customers of this stock right here. They're doing some acquisitions right now. I wonder if we can pull that up. It's probably too long ago. Oh, Palo Alto Networks and Google Cloud announced 10 billion security partnership. That's pretty cool. German Competition Authority. Oh, approves. Okay, great. Approves the merger with CyberArk. CyberArk is a huge, another huge cybersecurity stock. They're also publicly traded. I don't know what their ticker symbol is, but you can just type in CyberArk. Let's see. Let's go look at their numbers down here. So this is a subscription model company mostly. Check this out. This is what you want to see for a stock if you're just going to diamond hand them. You'd want to have a company where their subscription model, or subscription revenue just up and to the right. And it's easy, like it's reoccurring revenue, easy to predict. Analysts love subscription revenue, and that's what you want to see. And not just the subscription revenue, but let's see the support revenue. Yeah, that's also growing double digits at a record, and their product revenue also at a record. So everything here is headed in the right direction. They're printing net income, making a couple $100 million net income a quarter. Same, even more on the free cash flow. They probably have some stock-based comp. That's why the free cash flow is way more higher than the net income, but the bottom line is still phenomenal. Like 400 mil a quarter. So yeah, Palo Alto Networks is a great stock to diamond hand. It's almost, it's another expensive one like Palantir, but this one's at the top of my watch list. Like that's the cybersecurity name you want. Same with CrowdStrike. CrowdStrike, these stocks will never get cheap. This one's at a 1900 forward PE. But that's because they're just now getting EPS positive. Favorite brokerage to trade on phone? Yeah, hey, that's actually this one right here. If you want to get this brokerage I'm on right now, it's actually in the link tree in my bio, very first link there. It is an affiliate link. I think there's like a Christmas special going on where you get like some Nvidia stock or something. But anyway, if you want as my affiliate link tree in my bio, very first link there, broker called Moomoo. Um, but yeah, Robinhood's good too. I also have that up there. Hey, what up, Ben? Uh, Bennett Jude. Hey, thanks for that, man. Um, let's see. Thoughts on C. I'm a little behind here. Uh-oh. Let me speed up in the chat. Okay. CME Group. Let's do this one right here. What up, the Ace, and what up, Eric? Um, so here we go. Here's CME Group. This is exactly $100 billion company, and the forward multiple is a 25. So it's not an expensive company. And this brokerage is telling me, what is this right here? Rounding bottom, 94%. Hey, I also have Webull too. Webull's good. Um, yeah, hey, here's my Webull. All these apps are all in the link tree in my bio, by the way. Very first link there is the one I recommend. So here's CME Group, though. This brokerage is telling me that there's a rounding bottom. Okay, let's go look at the actual numbers, though. So they're, are they like a financial platform or something? So they're in interest rates, equity indices, market data and information services, energy, agricultural commodities, maybe agricultural commodities trading, or I don't know, metals, foreign exchange. So they're very diversified. That's interesting. And here's their bottom line. Wow. They're easily making, and this is after tax net income. It really is. They're making around basically $1 billion of net income a quarter. So yeah, and they're worth $100 billion. So that's kind of easy math. Yeah, 25 forward PE or 25 PE. You get a dividend. Yeah. Wow. Hey, so not only that, but you get a near 4% dividend yield here. So the payout ratio does say over 100. Let's go verify that for ourselves. So on average, I like digging into the numbers. Let's go see if that's true. So they're easily making, we'll give them the benefit of the doubt. Let's call it exactly 950 mil of net income of net income a quarter. Okay, so they can easily afford the dividend. It's probably including the special dividend. So yeah, the dividend, their normal dividend only cost $455 million. So that 4% dividend roughly has a 45% payout ratio, call it. So yeah, it looks like they do this annual yearly special dividend. Look at that. Yeah, Q1 of last year and this year they did one as well. So let's actually go see that down here. So yeah, $1.25. Oh yeah, look. And then it was a $5.80 on top of their $1.25. And they're about to do another one. So anyway, CME, there you go. That's interesting. I like that one. Clem said, can you look at MIKN? What's that one? MIKN. Hey, I actually typed in MIKRON. MIKRON. Yo, there's my MICRON. I don't know about MIKRON. I couldn't find that one. I did look up the ticker symbol. They make SMR nuclear reactors. Was looking for a uranium play, but IDK. BWXT. Hey, BWXT has some good numbers, right? I don't know. That's what you're talking about. Hey, what up, two Katrinas? Appreciate y'all. Let's see. What do you think about the price of, the quantum, like D-Wave and Riggedy Computing? These are stocks you just avoid. These are trading vehicles. You're not buying this stock as like real exposure to quantum. These are kind of just startups. Like if you look in the top right, the market cap, it's a $7.5 billion company. Like this is what you're buying. You're paying $7.5 billion for a company that did 1.9 mil of revenue, down 18% after it fell 23, lost 200 mil of net income this quarter. Like these are just names you don't trust. And that's why these rallies are never sustained, because the financials, like you always need good financials on top of that to keep the momentum going up higher. And these are the kind of stocks that'll just probably, sadly, my prediction, this is Riggedy Computer will just slowly keep on bleeding down to like $1 billion valuation or lower. So it's a 80% decline we got on them. Oh, hey, PM. So I can't really cover this industry. I can't talk about what they do, but this is a great dividend name, and they've been really growing their Zen business. So here's PM right here. The forward multiple is a 23. So that's not expensive. A 23 forward PE. I think that's what the S&P 500 trades at. Yeah, S&P 500 trades at, 28 for PE. But yeah, if we go to right here, this is their Zen business. I don't even know if I can say that. So if the stream gets taken down, uh-oh. But check out the growth here. Like that's impressive. Like this double digit growth, it's up 17, after grew 14, after grew 35. So they're on a streak of growth right here on their free business. So that's impressive growth. So if we go to their bottom line down here, they did have a one-time adjustment this one quarter. Says they lost 500 million. They didn't at all. That was some like what was it, like some amortization write down or goodwill write down. It was something stupid, but it doesn't matter. That didn't actually happen. The core business really did make this quarter 3.6 billion of after-tax net income, and that's insane. And look, the net income grew by 12, but the net income per share grew by 13. So they're not only rewarding you with a 3.5% dividend, but they've done over a 1% of buybacks. So great shareholder friendly company. And they finally, like, what has led them to grow so much is because they finally have growth to one of their businesses, this free business right here, which is in. It's pretty cool. Anyway, yeah, that one's a nice dividend pair. Ooh, Well Tower. What up, Garrick? So yeah, this is a senior housing operations one. So they're actually a REIT. This is a REIT. So 90% of the assets are real estate. They own the triple net lease, basically the land under a bunch of not hospitals, but like the senior housing facility care, healthcare facilities. So senior housing. Let's actually pull up their website. They're S&P 500 company. I wish I owned this one. Yeah. Check this out. Yeah, A rated by S&P Global and Moody's. I guess here are some of their properties. So yeah, just kind of these kind of properties, and this whole industry is booming. Now this one doesn't have a crazy high yield, but this yield is super sustainable, like a 1.5% dividend. That's because they're a REIT. Another way that I almost like getting exposure to this industry is CTRE. This one might be a better play. So, and they're just as growthy. They have a 3.5% dividend, so a triple the yield, and they're so under leveraged for a REIT like I've never seen before. This is a fortress balance sheet for a REIT, and we can see their top line grew 71%, after grew 40, like incredible top line growth. I actually think I made a video about that. Hey, look, no one's made a post about this stock because it's so dead, but hey, I actually did make a video about this stock a while back, I guess. But anyway, CTRE is a great, another way, like Welltower, to get exposure to that industry. You never look at the PE ratio for those because they trade it. You always look at the price to AFFO, which it's basically the net income plus the depreciation and the amortization, which is super important for REITs. All right, Dan. Hey, what up, Marcus? He says, can you look at German stock HEI? Let me know is it called Heiko? .de. Actually, if you give me the company name, I think we can find that there, Marcus. So Danimal Hanimal said Uber. Let's do Uber stock. I love this one. This is one I think is a great never sell. CME has a moment when it comes to future trading. Ooh, nice. Oh, we'll look at Main Street Capital and some of these other names too. So here's Uber Technologies. Well, this brokerage is telling me that there is a technical bearish continuation triangle here. That's good news in my eyes if you're looking to buy the dip, because if this goes lower, it's going to I could not see Uber trading at below like a 20 forward PE. Uber trades at 24 times next year's PE ratio, or basically next year's net income, which is so cheap for a quality name like this. Here's some other cool things we get, like their monthly active consumers, like not just monthly active users, but their monthly active consumers are 189 million, when this exact same time last year was 161 million. So more and more people are using their app, like their delivery business, which is Uber Eats and business deliveries. Like, look at this. Like you can literally send like mail packages through Uber from like one business location to another. But yeah, the delivery revenue grew 29%, after grew 19, after grew 7. So it's the growth rate's growing over here on the Uber Eats, and also the main, mobility revenue still it's COVID's long gone, but we're still growing double digits, 20% after 26, after 32. So just incredible growth on all their businesses, and it's done wonders for their bottom line. Now, it says they made $6 billion in net income this quarter. They didn't actually, but they really did make $1 billion, and it really was a record Q3 for them. Same with free cash flow. It's phenomenal. They're making literally $1 billion plus in net income a quarter, $2 billion of free cash flow a quarter. And then what is Uber doing with all that? They don't pay a dividend or anything. So we're actively investing that into other companies in the same industry, like Grab, for example. I think this was a great asset for Uber to pick up. If we go to the shareholders here, Uber is the largest shareholder. And what is Grab? What is this stock right here? Well, it's literally Uber, the exact same thing as Uber, but internationally. It gave Uber instant international diversification, which I think is genius. You notice the US and Canada aren't on where the revenue comes from here on Grab. So I like Uber. That's a good one to even it's worth nibbling on right now at their current prices, I think, not financial advice there. Company's made is HEI Heidelberg. Ooh, I think we found it. Let's go here. We found it for you. Um, wait, let me try the other ticker symbol here. Okay, we found it. So Heidelberg Materials. So it looks like a German company, he said. So yeah, let's convert the currency from euros to USD just to get a better idea here. So there are analysts covering this. So the revenue, okay, so this is from 2019. So we don't actually have, okay, so here are 2025's data. So it looks like they missed on revenue slightly, missed on EPS, but look at the EPS projections now. That's interesting. So the net income, if these analysts are right, the EPS is supposed to go from $1.84 to $3.20. So I mean that year over year comp is going to look phenomenal if that's true. So these are old numbers. So, but all we have is the analysts to look at here because it's a European company. I guess they don't report so we don't get it. But anyway. Hopefully that was helpful. Maybe we can see what they do here. One of the world's largest building materials companies, cement and aggregates used to construct houses, infrastructure, and commercial facilities. So yeah, like a building company, and maybe it's interest rate sensitive there. But if infrastructure is booming right now, so Uber is a crooked company. Fundamentals probably. Hey, what up, Neil? Yeah, Uber. Uber sometimes what I see like. They reset like 1-star Uber reviews. You can get it like reset and and it's not good. Like you ever get it's always such a varying experience. Ooh, let's see. Should we do, yeah, Main Street Capital. This is a monthly paying stock. You buy to maximize income. So if you want a stock, you just want to buy to maximize your dividend income. You don't expect to outperform, the tech heavy S&P 500. Check out Main Street Capital. It's a BDC. So they're basically a lender. And they pay you monthly. They pay you every single month. Though, they do it 30 cents. They pay you 30 cents a month now. That's a good increase. So, or no, that was a special dividend. Yeah, that was a special dividend. Yeah, they're making so much money that they frequently do these special dividends. Yeah, it looks like they pay you 26 cents every month. So, which is a yield of a 5.2% dividend yield. And it's even higher when you include the special dividends. But yeah, that's when you buy to maximize your income. They do first lien loans, second lien loans, and like preferred stock when they do these loans. So I used to own them actually. It's a good thing to put in your Roth IRA too, because whenever you own those assets, like a REIT or a BDC, whenever you receive those dividends are actually taxed at short-term capital gains and not long-term capital gains like all these stocks. It's not your typical qualified dividend like McDonald's. Yeah, actually, fun fact, because I make under $48,000 a year, long-term capital gains are taxed at 0%. So what that means in English is whenever I receive a dividend, since I make under 48K a year, all the dividends I receive are completely tax-free. That's just how the US tax system works. It actually really favors the low income investing wise, because here's another cool thing right now, you see my Meta shares, if I took all my gains on Meta right now, it would be 100% tax free because I own the stock for over 1 year and I make under 40K because I'm in that tax bracket. Anyway, let's go back over here. So let's look at some more stocks. Main Street Capital, that's a cool one for monthly income. Novo Nordisk. Hey, that's kind of like they just got FDA approval for their Wegovy pill. So basically they sell two main weight loss prescriptions. They sell Ozempic. Everyone knows that. Elon Musk is on Ozempic. And then there's Wegovy, just another GLP-1. And check this out. This was why they rocketed up earlier this week. Novo Nordisk secures FDA approval for oral Wegovy pills. So everyone's been trying to, because you have to take the injections for that weight loss stuff. but I guess they're making a pill version, which would be way more adopted. But yeah, this is a pure weight loss play. If we go to the revenue, 93% of it is their diabetes and obesity care products, which is again Ozempic and Wegovy. This quarter was not good though. If we look at their revenue, they missed on revenue. So analysts expected 12.1, they did 11.7. So last time they reported earnings, sadly they deserve to gap down. And there might be it's not the best value stock. So if we go to the revenue, I'll go right here. The revenue grew 10% year over year. So the revenue grew by 10, but the profits, the net income fell by 22. Yeah, and that was real. Like the core business, the operating profit really fell by 26. So what does that mean? That means their net margins are collapsing. Their net margin went from 38 to 26. And that's because they agreed to cut the prices on Ozempic and cut the price of Ozempic by like 75%, 50% in a bunch of countries, and it's just compressing their margins right now. So they're missing on revenue. It would, that hurts the top line and the bottom line the most. Uh, so all that being said, it might be sadly kindly fair valued around this 13.3 forward PE. Oh, and I forgot to mention they lose their exclusivity for Ozempic in a couple years. That was one of the main margin collapse stories back here because their Ozempic patent, their main bread and butter, the patent for it expires in like 3 years. So it's a tough environment to be in Novo Nordisk, but you get a great yield. You get a 3.5% dividend. And that weight loss pill is actually phenomenal news. Like I can't. That is such a good. I can't wait to get more updates on that. That's phenomenal news. Great news for Novo Nordisk. They definitely deserve to go up on that and get a slightly higher multiple. So, Mike, he said Amphenol stock. This is one of my favorite stocks of all time, and I'm totally biased. But out of all the companies with a 33 forward PE, this one is a phenomenal one. And I have actually been buying this one kind of at all-time highs. Like I bought the dip down here. This is a great AI infrastructure play. Someone called this like the nervous system of AI because they do the like interconnect the cables, the copper cables, the wiring, and like they supply NVIDIA with their NVLink spine. Amphenol's the main supplier for their copper cables. They use it literally like 2 miles of copper cables in this little box. But the best part is just the growth here and the margin expansion. Revenue's up 53 and profits are up by 106. So again, that means their record net margin has never even been over 20% before. So record net margin, record sales, record net income, record free cash flow. Everything here is headed in the right direction. They pay a dividend too. You get a 0.5% dividend yield. They just rose their dividend by a good chunk as well. So and they're doing the CommScope acquisition, which is even more huge. It's going to be so accretive to EPS. Like I've my prediction, it's going to be even more accretive to the EPS than analysts originally expect, just off how CommScope. So basically, Amphenol stock is acquiring this connectivity and cable solutions business from CommScope, and that was before they reported these two earnings reports, and these were blowout record reports. It's very complementary and synergistic to Amphenol. So I just can't. I'm so bullish on them, and I think this is the kind of stock that is just going to continue to climb and climb higher. It's probably a tough risk to reward buying it here if you like didn't already previously own it. Like for sure, like I miss these days, like buying this one during the April dip down here. But yeah, I don't mind dollar cost averaging up because I just want to build on my quantity of shares here. Kind of like Comfort Systems as well. These are great just AI beneficiaries that are like, you don't like, in my opinion, like it's tough to buy NVIDIA right now. So instead of buying NVIDIA, buy the whole AI ecosystem from Comfort Systems to Powell Industries to Amphenol to Constellation Energy. Let me pull it up. Yeah, Constellation Energy. Yeah, Google. Like all like TPU play. Like there's so many good alternatives. And NVIDIA is still a great one. Actually, NVIDIA is a steal of a deal right now at a super dog cheap valuation, a 28 forward PE for our world's largest company, NVIDIA. But what I was more talking about is if you look in the top right for NVIDIA, the market cap, they're worth 4.67 trillion. For you to double your money, they have to be worth almost, 9 trillion. So or over $9 trillion. So it's just a tough double on NVIDIA versus I think some of these other names that are able to raise prices even more. So let's see. Yeah, hey, I have not bought any more Amphenol since this dip right here, but yeah, great company. Visa or PayPal? Oh, if I would pick Visa just for the more quality. How about CI? Yeah, hey, we'll get to CIFR too. Oh, and how about Amazon? Amazon's another one. Here we are in the Nancy Pelosi portfolio right here. That's a stock she owns. Her second largest holding, or no, it's not by weighting, but 10% of her portfolio is in Amazon. But another chunk of her portfolio is in Visa. Let's pull up Visa right here. This is a stock that is a safe, never sell. Probably tough to buy here, but this is the stock that just kind of is just going to continue to go higher and higher. Here's their bottom. The small little micro credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. Because whenever you go swipe your card at Walmart, they take 3%, 1.5% from you and 1.5% from Walmart, but it's like a hidden fee, so you don't see it, but they do take it. But look at this down here. The net income is phenomenal. They're easily making basically $5 billion of after-tax net income a quarter. That's after they paid over $1 billion of taxes. Like they really made every quarter $5 billion of after-tax net income. What are they doing with all that? Well, they do pay a dividend. They reward it to the shareholder, but the dividend only cost $1.1 billion. So that's what I love. There's so much future room for Visa to raise that dividend. But since they have so much leftover money, the real winner are the buybacks at the top here. They're easily doing 4 to 5 billion, sometimes more, of share buybacks every quarter, and that just does wonders for the shareholder. Like if we go to the net income down here, the net income says it's down 4.29% year over year. So the net income's down by 4.2, but the net income per share is only down by 1.1 because the share part of the ratio went down. Remember, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes this is the share part of the ratio. Less shares exist, so this didn't fall as much. Plus, whenever they buy back shares, it makes the cost of dividend go down, gives you more ownership, it makes the PE ratio go down, it just EPS go up. It's just great. Would you say 55% in tech is too much for a 22-year-old? No, actually, I wouldn't. That's the industry you want to be in to really get those compounding returns. You almost have a 1-to-1 ratio of investments to income. Hey, Roblox. Brian says AI is a massive bubble. There's no possibility all these investments by the companies are going to see any path. Well, hey, actually, these companies, I don't know if you have one specifically, but like Nvidia, the thing is, here's why I don't think we're really in a bubble. The Mag 7 valuations aren't stretched. Google's at a 20, we'll start with Amazon right here. Amazon's at a 30 forward PE. So that's 30 times net income. I mean, that's not nuts. Nvidia's at a 29. I think Google's also at a 29. Meta's at a 22. Let me pull up Meta real quick. Like Meta, 22 forward PE. I got Meta Ray-Bans for Christmas, like the Gen 1 ones. I think they're like $90 on Walmart.com or something. They're like on a sale. Yeah, Microsoft, look at Microsoft too. The AI toolkit of the future, the one that owns like half of OpenAI, Copilot, all the Windows Suite software solutions, 29 forward PE on Microsoft. That's why we're not too in evaluation. I think the S&P 500 could just continue to climb higher in 2026 as long as the E part of the ratio, the earnings, keep on going up. I think we're going to keep on beating expectations, but where we're starting to look kind of slow is kind of like the end of 2026 numbers and estimates. That's where we want to see. Hey, Adrian, how was your Christmas? It was great, man. How about you? Yeah, I hope y'all had a great Christmas. Happy holidays. I know we got New Year's coming up, New Year's resolutions. Maybe try to invest more, all right, let me pull up that one for you. CIFR, this guy's been asking. Let me find it for him. CIFR. So Cipher Mining. Okay, this must be a Bitcoin mining company and a $6 billion market cap, no forward PE. But what we're recently seeing is a lot of these Bitcoin mining companies are converting their GPUs to cloud hosting. Let's see if we can find that. Cipher Mining acquires Ohio site. That's interesting. Is shifting focus literally what I've never read this before, but it says the company is shifting focus from cryptocurrency mining to high performance computing and AI hosting. All the Bitcoin mining companies are doing that, from Iris Energy, from HUD 8. Basically, all this company is just a company that owns a bunch of Blackwell NVIDIA chips. They just own a bunch of chips in a data center, and they're converting it from Bitcoin mining to hosting. So that's still all their revenue right now. But there you go. I'm not one I'd really own. Kind of the long run, they're the bag holders. They kind of reminds me of like Iris Energy, a CoreWeave. It's gonna be so commoditized. There's an AI movie with Chris Pratt coming soon. Oh, what about silver? Like AG, I think it'll explode. Let's see. First Majestic Silver. So yeah, the price of silver, these precious metals have done great. Like gold's at an all-time high. I think silver might be as well. And this is just the silver, like I think stock. They just not the actual price of silver, but they own a bunch of silver like mines. Yeah, like all these ones right here and yeah, all their that comes from Mexico, their mines. But yeah, basically, if silver's doing great, this company's got to be doing great. Let's see how the revenue's doing. Revenue is yeah, wow, it's almost doubled. It's up 95%. Yeah, they're making great bottom line, record profitability, fortress balance sheet right here. So yeah, it's kind of like you get silver with a higher yield. The actual ticker symbol of silver, the commodity is SOV or the ETF. Yeah, the iShares Silver Trust. It's just XAG to USD, so silver to USD. Wow, no! What? Up 7% today? Is that real? Well, it is real, but whoa, holy smokes, ain't no jokes. Let's see, IAU, how's gold doing? Gold is ticker symbol IAU. Wow. I mean, all-time high on gold as well. So, hey, if you got any gold chains, gold jewelry, silver jewelry, maybe go hit up the pawn shop and be like, hey, silver's at the highest point. It's worth literally whatever your silver is, whatever it was worth yesterday when it was at an all-time high is worth 7.5% more. So yeah, what I saw was that one silver stock you recommended, AG, did not outperform, has not even kept up close to the actual like silver ETF right there. Okay, let's keep going here. Oh wait, Jay here. Jay says MDLN is a long-term compounder. I suggest checking it out. Let's check it out. MDLN. So, wait, MDLN. Okay, Medline. Let's check it out right here. Yeah, hey, what up, cool dude? Yeah, let's check out Medline right here. So, oh, sorry, my Wi-Fi is kind of bugging right now. Hopefully that'll fix it. There we go. Okay. Oh, this one. Oh, the Medline IPO. Yeah, Medline just IPO'd. I think they do like medical devices or something. I don't know. Let's see. Supply chain solutions. Oh, actually, I remember. I think this company does the same thing that yeah, Cardinal Health does or something. So what's their net margin here? So 4.5%, 5% net margin. Yeah, they're making great net income every quarter. They're easily making 300 mil of after tax net income a quarter. Yeah, that's great. Yeah, they made 300 mil after paying 120 mil of taxes. So it says medical instruments and supplies, medical surgical products and supply chain solutions. That's interesting there. I guess we can go to their website right here. But yeah, it looks like some medical. Actually, I want to check the forward multiple on this company. Now that would be interesting. Here's their website. Oh, uh-oh. I really want to pull up this screen right here because it's pulled up and I want to show it on the screen if it'll load here. But it says next day shipping to 95% of US customers. Maybe it's because it's a website and it won't pull up the website. It won't pull up the actual screen. That's annoying. Well, hey, if y'all want to hit the follow button, we do stream every day. We've been streaming for an hour now. What app is this? Yeah, hey, if you want to get this app I'm on, that's actually a brokerage. It is free, but it's where you buy stocks on. It's in the link tree in my bio first link there. It's free if you just want to like analyze stocks on. Yeah. All right, I guess that won't work then. Did my phone really like? Oh, my phone's been disconnected this whole time, and I just connected to the wrong TV. So, all right. If this keeps having issues, then we'll just have to abandon ship, call it a stream. But I don't think it should work here. Okay. Please? Okay. Medline. Okay. Forward PE on this company. There is no forward PE, but it says their current PE ratio is a 27. I'm assuming that there's no forward PE just because there's no estimates. But yeah, there's no analyst covering what they expect in the coming quarters. So they're really at a fair valuation. You get Medline even right now at a 27 forward P or 27 PE. It might even be cheaper on the forward PE. You know what? I'll actually put them on the watch list. So you know what? I can pull up their website now. Yeah, I've been spending way too much time on this stock, but last thing on this stock, I wanted to pull up what this said right here. Yeah, look at this. Next day shipping to 95% of US customers, 43,000 employees globally, 29 million of square feet of warehousing, focus on solving America's. Well, anyway, there you go. Supply chain medical device delivery kind of company. Um, hey, what up? Thunder said, issue is all these companies' earnings are from their core businesses, not seeing any from AI capex. Yeah, hey, that's true. Like Meta's really being questioned on their AI capex spend. Uh, yeah, like what what's the end of the net margin game for these? Like, especially for like a core weave and Nebius, the net margin end game looks rough. But yeah, like Meta's just plowing 20-25 billion a quarter into AI and investments, and it's 100% of their net income. But Apple's actually being rewarded for that. Apple is spending no money on these. Like LLMs are just going to be so commoditized. They already are. I no no one's going to pay $200 a month for like ChatGPT subscription. Like when there's like Google Gemini is just as good in all these other subscriptions. Like it's just the price, the cost for the consumer is just going to go way down. And that's what Apple's doing. Apple is actually just going to apply and partner with whoever's doing the best. And Apple already does that. They pay Google Gemini or just Google over $1 billion a year. So pretty cool. Hey, what up, Charles? He says, hope you had some quality time with your family. I sure did. I hope you did too, Charles. Hope everyone's having a great holiday week. Happy Merry Christmas and Happy New Year. We got New Year's coming up. Hopefully some New Year's resolutions. Uh, yeah, hey, Clem, I tried to find Micron stock. I just don't think I can find it on this brokerage. Like he said, MIKN. I type in MIKN and nothing pulls up. And then, yeah, I can't find that stock. Maybe if you give me a ticker symbol or something. But yeah, I just double checked. I can't find that one. And my thoughts on Cardinal Health. Yeah, that's kind of the same thing. Cardinal Health. That's it basically does the exact same thing as Medline. I'd maybe rather buy Medline. I don't know the valuation on them. CAH. Well, if you know what, we'll give it one more minute here, and then if my Wi-Fi just doesn't want to work, then hey, we'll call it a day. And hey, by the way, if y'all wanted to follow button, I'm probably going to do another live stream tonight because I'm not doing nothing. We got a little something going on a little later, but I think late tonight I might do another live stream. This really doesn't want to work. Hey, what up, Luffy? Recent buys. Yeah, I haven't done any buying at all. I'm actually about to buy another share of Amazon, but my most recent purchase is Southern Company, ticker symbol SO. It's a regulated utility. Man, I I don't know what to do because yeah, the whole software is just crashing on me right now. So maybe this will work. Oh, it's working again. Okay, yeah. Here's Southern Company. This is my most recent purchase. It's a bit of a higher yielder, 3.4% dividend, 20 PE. These regulated utilities like Southern Company, or just the whole, if you go to the whole regulated utilities, well, not just regulated utilities, but just the whole utilities ETF right here, this always just gives you around 7% of your money back every single quarter or every year. I mean, so it's not going to outperform the tech heavy S&P, but you do get a safe 7% total return a year, like 5 to 6% stock price appreciation. And then you get a 2.5% dividend with this ETF too. So yeah, its largest holding is NextEra Energy, then it's Constellation Energy, then there's Southern Company, shared with Duke Energy. So yeah, just the price of electricity is just going to keep on going up from all these data centers stealing all the electricity, and some of these utility companies are still very fairly valued, like Southern Company only. So I've been buying them. That's my most recent purchase and newest stock. Yeah, hey, I did look. We could not find Micron. But hey, what up, Monkey D. Luffy? Good to see you. Thoughts on crypto? Yeah, I don't love crypto, but I don't actually. I just don't own any crypto. My favorite way to get exposure to crypto is the picks and shovels play. Buy Robinhood, or I own a lot of the fintechs. Robinhood, SoFi, Futu. Actually, Futu would be another one of my most recent purchases. There's kind of I've done a bunch of buying back here. It's a great company. Futu is this app right here. This brokerage publicly traded, like triple digit growth. I mean, it's phenomenal on Futu. So yeah. And same with Webull. Webull's another one. Like this brokerage I'm on right now. Webull, I own their stock, and they just brought crypto back to the app and prediction markets. So it's kind of the picks and shovels play. Yeah, Robinhood used to follow exactly whatever Bitcoin does. Like Robinhood stock and Bitcoin would almost move identical. But then when Robinhood announced the prediction market stuff and they made even more money than just crypto, they did even better than Bitcoin. All right. Campbell's Soup, is that CB? No, I'll type it in for you. I know they own some brands like Campbell Soup owns like Goldfish and yikes. So look at Campbell Soup Company. This one's a tough one. If you bought them in 2002, it's the exact same price that it is today. So it's a tough one. An 11 forward PE. General Mills, I think, is a pretty good price right here. So meals and beverages, snacks. How's the snacks doing? So yeah, it's down 2% after it fell 7, after it fell 0.5. So that's not great. And then, like meals and beverages, like soup cans, I guess that's down 4% year over year. I know a lot of investors, whenever like COVID happened and like end of the world scenario, whatever, a lot of money flooded into Campbell Soup. But yeah, it's not one that's a great one, kind of it's kind of a yield trap, a 5.56% dividend yield. If we go to their total revenue right here, it's negative 3.4% year over year, and the net income fell by 11. So dang, look at that. So revenue's down by 3.5, but the profits are down by 14.9. So what that means in English is that gross margins fell 6%, net margins fell 7%. So their margins are going down as well. Hey, Frosse, I appreciate that, man. But let's see, they're making around, let's average it out, like that one quarter, let's say 150 mil in net income a quarter. They're making 150 mil in net income a quarter, and the dividend cost 120 million. So it's actually not the end of the world. Yeah, around a 75% payout ratio for the dividend. So it does appear to be safe. But yeah, like this one quarter when they only made 66 million, it does look like it was a one-time adjustment, but that could not afford the dividend that quarter. It's a tough one. General Mills might be a better buy here. General Mills might just be a safer trade. A 12. It's even actually it's cheaper. It's a 10 PE and 5.15. You basically get paid the second you own it. But it's with the whole. I don't think like the GLP-1 weight loss prescriptions are gonna destroy these companies. I don't know. Here's General Mills. They're very diversified. They're in snacks, convenient meals, cereal, like Cinnamon Toast Crunch, dough, like Pillsbury dough. They're in pet food, baking, mixing ingredients like Pillsbury, super premium ice cream. Actually, I have a really cool stock for y'all. They actually just split off from Unilever. So I just added it. It's ticker symbol MICC. Haha, not one I'd buy, but it's just a cool, interesting name. This is Ben and Jerry's and Magnum ice cream. If anyone's heard of it, it's like a premium kind of ice cream brand. But yeah, they just spun off from Unilever, which was a European company. So we'll convert it to USD. But yeah, this is the company that owns Ben and Jerry's, and they own Magnum ice cream. So it's basically like a pure ice cream play. So again, they just spun off from Unilever. That's why there's not too much data here. It wasn't like an IPO. But anyways, interesting there. Hey, what up, Skedding? Good to see you, man. And Andrew, what's up, y'all? Hope y'all having a great day. Can you look at GEVO? What's this one? GEVO Inc. There are much more efficient chip technologies coming, which may make energy stocks crash. Oh, hey, that could be. I don't know. I heard that thesis a long time ago, but the PJM auction prices of electricity that would just happen last week, 2 weeks ago, is at a record. Price of electricity is crazy. So TikTok saying I'm AFK. I gotta fill out a captcha real quick. All right. Okay, we're back. Sorry, TikTok made me fill out a captcha, but okay, here's GEVO Inc. It's a small name. We don't really like to cover these. Like the market cap's only 490 million, so very small market cap. Yeah, dang, look at that. So stock, yeah, because of all the reverse splits that they've done, the stock used to be like $158,000 a share. So let's see if we can see why they're only worth that amount. So, whoa, they finally have revenue. That's phenomenal news. Look at that. They used to have no revenue, 3 million, 1 million, but now it's 40 million the past 2 quarters. That's phenomenal. Did they acquire something? Ooh, maybe they did buy something. So they spent like $200 million buying a company or buying some sort of asset. And they're actually getting net income positive. That's great news. They made 2 mil of net income last quarter. Then they lost 7 mil this quarter. Like back here, when they were losing 20 mil of net income a quarter, that's devastating. That's 80 million a year. And when the whole company's worth 500 million, that's well over, 15% of the whole market cap you lose in net income a year. So there was some real bankruptcy risk. But as long as they can keep this up of like narrowing their losses, yeah, they only lost basically 3 million this quarter. The revenue's triple digit growth, quadruple digit this quarter. It's honestly not the end of the world. Maybe it's like a super, super small position. You don't want to trust that with a lot of money. Do you still like Sprouts Farmers Market? It's been trading sideways for a bit. Yeah, I actually do like Sprouts Farmers Market. It's more like it's probably sadly like fairly valued here. Around this like 15 PE. I did, of course, I did buy a little bit of Sprouts Farmers Market. Tried to lower my cost basis. Yeah, we are down bad on this company. We're down 38% on them. They're like a healthy grocery store, Sprouts Farmers Market. I like their no. The thing is, if you're sure, you just wait to the next earnings reports. Like it's they have good numbers. I do like them. But yeah, you probably don't want to have it as a super big size position like me. Even after its huge dip, it's only worth $790. I don't, yeah. All right. Do you think Duolingo's undervalued? Ooh, Duolingo. This is an interesting, language learning app. I was just there may be a day where you never need to learn another language because AI will just translate it in your little augmented Google glasses for you. But yeah, it is kind of the AI thesis is hurting this one right here. Basically, Duolingo is an app you go on to learn a language. And if you have to pay for their subscription if you don't want to get flooded with ads. So most people pay for their subscription. This is the part I love. Their subscription revenues booming. I mean, subscription revenues up 45, after grew 48, after grew 45, after grew 47. Like it's always like 40 to 50% growth every quarter. Like there's only green on this screen. And there's also their advertising revenue that's up 46%, after grew 23, after grew 16. So that's also booming. Both businesses are booming. Yeah, rest of the world is actually most of the revenue. People trying to learn English. But yeah, another thing hurting their margin or hurting their valuation right now is like OpenAI is creating another language learning app competitor where you don't have to like pay for a subscription. So that's the sad part is Duolingo is trading at a 39 forward PE. Like even after this massive dip, Duolingo isn't super cheap yet. A 39 forward PE. They certainly deserve a high multiple because of that subscription growth rate was so impressive, but it's a tough one to buy meaningfully yet. Maybe start the small nibble, but don't full size position it. They had a one time adjustment this quarter. It says they made 290 mil in net income. They didn't actually. They made 35 mil, which was still a record. But that's why you don't look at their current PE. It says a 22 is their current PE because of that adjustment. Their forward PE is actually at 39. So I'd be careful still at this valuation on Duolingo, but I like their numbers. I really do. He says, I scrolled past four stock TikTokers and they all said Duolingo's a good buy right now. Well, hey, I guess I'm the contraire then. Hey, by the way, I'm just trying to be honest always. I have no, like in the race, I don't sell anything. I have no course, book, WhatsApp. I don't coach. I never follow you, DM you. Yeah, please watch out for people impersonating me. Noah says STRC. Is that Sterling? No, I haven't heard of this one. Strategy. Oh, STRC. This is like I don't even know what to call it. It's like a Bitcoin swap, like dividend ETF. Like you buy this to maximize your dividend income, but they have like this interesting strategy where it massively fell right here. Basically, it's like underlined by this stable coin and it depegged by like 11%. The stable coin depegged by 11%. Like how a stable coin like Tether is supposed to stay at $1. Like I forget it all exactly. I wouldn't so fully trust this one. It's certainly interesting and one of the better like dividend ETFs, but I don't know about this one. I think the yield is like a 10-20% dividend yield here, but it's a weird thing I'm still trying to investigate. That doesn't look so totally safe yet, but it's interesting dividend strategy there. That I really haven't done enough research on that one to form a real opinion on that because I was reading something about it, but Um, Sweet, my mom is heavily invested. I was worried. Yeah, I wouldn't have that as a big size position. Careful with that GEVO there. Hey, what up, Joe? It says LIN. Let's check this one out. Oh, and hey, Legend. Yo, don't worry. Or Legrand. We will get to Celsius. I got you. Good to see you, man. Hope everyone's having a great holiday. We'll get to Celsius. And yeah, can you do Nike? Maybe we'll get to Nike. Sadly, Nike doesn't look too great here. More expensive than all the Mag 7. So here's Linde, 26 forward PE. So let's look at their numbers. They had a nice little rally the past week here. Let's see what they do because I don't know what this. I've actually never heard of this company. So America's, Only 34% of the revenue comes from the US. They're a specialty chemicals company, industrial gases and engineering, designs and builds equipment for industrial gases. That sounds really nichey. Nah, they're not getting my cookies. Oh yeah, so yeah, gases may be invisible, but they're everywhere, helping to improve healthcare. Yeah, yeah. So maybe they make these big balls or how, those things. Okay, let's go look at, I'll put them on the wall. It seems like an infrastructure play. Let's check out the bottom line. What's their margin doing this stuff? Net margin. Wow, a 22% net margin, and that margin grew 19% year over year. So, yeah, wow, they really are doing 1.8 to 2 billion of after tax net income a quarter. And you get a dividend, a 1.4% dividend yield. Actually, I really like Lynn. And it's done great since 2019. If you look at the price of oil, oil is really cyclical, natural gas or whatever. But this one's actually can like benefit from that industry, but not be so exposed to the actual commodity. It can go higher. They have great margins, great bottom line. You know, that's really interesting. Investing a lot in the future. Free, yeah. Let's look at the free cash flow too. That's what FCF stands for. Yeah, phenomenal free cash flow as well. So yeah, 25 PE. Interesting name there. So let's do Celsius right here. Celsius. This is a really cool name here. Um, Nathan, have you seen any good tech stocks like Micron or Qualcomm with good double digit or triple growth, sub forward PE? Nah. Can't think of any, and I know a lot of them. Sub 20 PE, yeah, no. That you used to be Lamb Research, yeah, it's just kind of like Micron. There's those other hard drive plays, the memory plays. Actually, one of the I want to get to Micron and Nintendo later. The high memory prices are crushing Nintendo stock right now. Let's get to Celsius though. This is that beverage company. If you heard of Celsius, Alani, or Rockstar Beverage, all those three brands are under this name right here. Now they just finished their acquisition of Alani and Rockstar Beverage, but the organic Celsius brand, just the Celsius brand year over year, grew 44% organically, which was great. And then Alani contributed another 114% to the retail growth. But there was a one-time adjustment right here, which just a one-time adjustment, which is great. Profitability declined by 250 million, linked to a termination cost transitioning Alani to PepsiCo's network. So PepsiCo network now has a huge stake in Celsius, and on top of that stake, so Pepsi took a stake into this company for free. They gave Celsius the Rockstar Beverage brand and this distributing, way cheaper distributing network where the whole supply chain, Pepsi's going to do it for them. So. And Celsius expanded its U.S. drink market share to 20.8%. Wow. So like an energy, yeah, U.S. energy drink market share is 20.8% and grew international revenue by 24%, led by Nordic markets. So there you go. They have a big market share. I love how the brand is organically growing, the Celsius brand. On top of Alani, I love Alani. And I don't know if I've had Rockstar, but yeah, the revenue grew 172%. Again, a lot of that growth comes from that acquisition of Alani. That's also why their balance sheet out of nowhere just spiked up these past 2 quarters. Like so much has happened in the past 6 months for Celsius, and I think the future's bright. If we go to their net income this quarter, this was that one-time adjustment. It says they lost 61 mil. They didn't actually. The core business made 160 mil, but you had to add in that one-time termination cost to their GAAP net income, but that'll never happen again. The free cash flow was 320 million. Ridiculous. So yeah, there you go. There's Celsius for you. I actually do like them. It's a small position, kind of like I'd like that industry. Like look at Monster Beverage. Y'all want to see you won't believe it. Monster Beverage is like is a monster performer. MNS did please Wi-Fi. Oh my goodness. Now I can't even MNST Monster. Okay, well, great. Does the PE at 30 worry you? No, you should check the forward PE because they had a one-time adjustment to their net income again from that termination cost, which when the net income goes down, that makes the EPS go down. So yeah. Okay, if the Wi-Fi crumbles, we'll give it 30 seconds, then we'll see. Okay. Yeah, those are the other ones. Yeah, Looney found them. It's WDC and STX. Those are also the like memory companies that are booming. I watch Linus Tech Tips to find small tech stocks. I was watching a Linus Tech video. He was touring a data center, and he was like, "This is an Equinox data center, and they're publicly traded." Oh, so my phone disconnected there. Well, there we go. We're back. Monster Beverage is at an all-time high. I mean, just boring Monster Energy, they all-time high. So it's a good industry to be in. So, there's another stock. Oh, Sal fun fact, said JD. Let's see here. Let's check this one out. By the way, if y'all are enjoying the stream, I appreciate if y'all drop a like for me. And yeah, yeah, we're probably about to end the stream here in a little, but I do appreciate y'all. If y'all want to hit the follow button, we stream every day. We're probably gonna do another live stream later tonight. So here's JD.com. It's one of the Chinese retail plays. I don't love the Chinese retail stocks. 11.4 PE. They always traded a low PE ratio. I'd probably rather own like a Temu, which is a PDD, also a Chinese company. I think the same or actually a cheaper valuation. I think they're at like a 10 PE ratio. But yeah, let's see. Oh, so it looks like their business lost money the past two. Wow. Yeah, the actual business lost money the past 2 quarters, but they're going to have the interest. So yeah, they're making like, I don't know. These are also tricky because like, they're like earning the interest on like holding customers cash, and it's like not include. There's a weird. I don't know about this one, but the forward PE is an 11.38. The current PE is a 9.6, so the net income is actually supposed to fall by like 15%. Oh, here, there's Morningstar Research right here. JD's new free return. You think that free return shipping policy substantially increased new user base? Is there any bad news? Many customers associate JD brand with substantially poor quality products and services and insufficiently competitive prices. Profitability suffers due to high employee compensation, low take rate, and heavy investments in the business. JD expands into value, destroying domains, which lacks competitive advantages. Well, anyway, it's a Chinese. Oh, by the way, that whole time we've been looking in Chinese yuan instead of USD. So yeah, the net income is substantially lower when it was. Yeah, so this is the USD. It says they're only losing 150, 170 million. Actually a cool ETF like CQQQ. This is like the China tech ETF, like without the Chinese retailers. Let's see if I can pull this up right here. CQQQ. Invesco China Technology ETF. Let's see. Please CQQQ. All right. Yeah, my Wi-Fi just hates me today. And there's a lot of people at my house right now, so maybe just they're stealing it. But, do you have any hidden gems you've recently added? Not really, sadly. I haven't seen the deals out there, which is unfortunate. Yeah, all right, yo. I've been trying, and the internet doesn't work with me. So hey, if y'all wanted the follow button, we'll be streaming later today. And if you wanted the subscribe button, like button, I do appreciate that. Today's just not working. Oh, if you want to support me though, there's only one way to support me. If you wanted to subscribe to my YouTube channel, is called Nathan Robert. It's also in the link tree in my bio. But you can just type into YouTube Nathan Robert, you'll find it. Here's the CQQQ ETF. Yeah, I want to show the holdings, but it's already lagging again. So anyway, hopefully, I say this never happens. I've never had the Wi-Fi just crashed on me this bad. So it must be something going on about the day. So anyway, see y'all later. Oh yeah, please watch out for people impersonating me. I don't sell anything, no course, book, WhatsApp. I don't coach, nothing like that. Thank you so much for being here. And thank you everyone on the YouTube replay. What up? Hope you have a great New Year and Merry Christmas. Looney, Plasma, Sal, Joe. Oh, I wanted to get to SoundHound AI too. SoundHound AI would have been a cool one. And it still hasn't even updated. Bro, okay, yeah, the Wi-Fi really doesn't work. But yeah, see, and ARM too. I love ARM. ARM is like a royalty play. Yeah, I need some Starlink. Maybe that'll fix the issues. The sad part is I'm on Ethernet right now and like the highest speed one, and it just has never worked as I wanted. See you guys.